Hello, everyone. This is Realtor Linda Peltz. Today, I'm sitting here with Freddie, and he's going to tell you all about what he does and what he can help you with. Take it away, Freddie.
Hello, Linda. How are you?
I'm
Thanks for having
doing
me on.
great. Yeah, well, thanks for being here. It's been kind of dicey getting you here. I've had a few issues on my end. I appreciate your patience.
That's okay. I understand. Realtors are busy, and so
We do get a little busy some
um,
days.
yeah, yeah. Uh,
Unexpected busy. That's what I was laughing yesterday. It was like, I can plan my day. I got all my little, color
mm.
marks, and life doesn't always like if crisis hits, crisis hits. It's like, yep, there went that day. We'll try it again tomorrow.
Got to be able to adapt.
I think that's a good job description for us realtors. You better be able to adapt. So
Yeah.
tell us, Freddie, what's the name of your company, and what is it can you do for my viewers? How can you help them?
Well, I'm a wealth advisor. My company is called Opta Financial. We're a wealth advising firm, and but we are a little different than your standard, you know, financial advisor type shop where we really focus on helping people build wealth, not just with market based assets such as stocks, bonds, mutual funds, and all that stuff. Also helping them you know, build real estate portfolios, build business portfolios, build things that cash flow. So we are. I've kind of likened it to checkers and chess, where if just saving money for 30 years, it's
It's
not
not
working.
enough nowadays, is it?
It's just not working. I mean, like if it was working, the wealth gap in the United States would not be expanding. It's expanding
Mhm.
at an alarming rate. Um, it's certainly not shrinking by any stretch of the imagination. And people have these old ideas that are just, in my opinion, clearly not working, but they continue to do it. Um, so we take a different approach. We do, of course, manage assets, but we aren't the type of advisors that are trying to talk people out of investing in real estate and out of investing in businesses.
Mhm.
We're trying to help people. We're trying to talk people into doing that stuff if it's right for them. If it's
If
you
it's
know
right.
if they are in a position where they're able to do that. And sometimes you got to play a good checkers game before you can switch over to chess. But we
Right.
like working with people with what I call the chess mindset.
Definitely. So if I came to you, I give you a call and say, "Hey, Freddie, come take a look and see what you can do to help me." What would you do?
Well, first thing we got to find out is what's your mindset, right? What's your attitude towards wealth building? We got to find out if you are a checkers player or are you a chess player. And if you're a checkers player, that's fine. Um, I want you to play checkers well, and I want you uh, to excel at that. But you also have to have the right expectation on what that game can produce, and you shouldn't be screaming at the moon. Why do the rich keep getting richer and others not?
Mhm.
Well, they're playing a different game. So first, we got to find out your attitudes towards different things, and that is
What
going to
what what my
really
expectations are as far as what am
yes,
I seeing when I retire? What do I
yeah. I like to take the retirement question away. I feel like that is even an over. It's just an overused concept, right? So it's just like this is a graduation mentality, right? Like you go to school, you get a diploma, then you go to college, you get a degree, and then it's like all this graduation. Whereas, I want to help people build wealth now, not wait around 30 years for,
Mhm. What is
some,
that old saying? Work smarter, not harder.
oh, you need to understand the rules of the game, right? You got to understand the strategies and be willing to implement them. And the biggest thing that's going to separate a checkers player from a chess player is their attitude towards debt. How do they
Hmm.
feel towards debt? If they are a checkers player, they want to stay the heck out of debt. They want to pay off credit cards. They want to pay. Oh, you should pay off credit cards anyway, but they want to pay off their home. They want to pay everything off and have no debt. Um, and and a chess player is actually looking to get into as much debt as possible without over leveraging. So when
Hmm.
I'm using debt in this conference, I'm not talking about, running your credit card up at Walmart. I'm talking about buying assets that are going
Wisely.
to cash flow. Yes.
Yeah. So maybe instead of paying your home out, you should be investing that in some sort of a tool, instead of like stocking all that money that's just going to sit there. And granted, a home's going to build value and it's your savings account. Yes, we get that. But that money might be, you may have a low interest loan and you may be making twice the interest at a investment fund. So you're making that difference. So that's kind of what you're talking about. You kind of leverage what they do have in order to make them more.
Well, using leverage is very important if you're going to play chess. It's also not a one step strategy, right? So what you're referring to is the arbitrage with having a low interest rate. That can be good for a lot of people, especially if they refinanced in the past and now they have like a 2.5 interest rate that they're never going to see again, in my opinion.
I
um,
know that was crazy. And we're having a hard time in the real estate market as far as getting people to want to sell their home for this next
right.
generation of people, these starter homes or whatever, because they will not see that interest rate again. And
Hmm.
I get it, but we are in such a home shortage, especially in our beginner homes and different things. It's like, I don't know what to tell you, people. We're trying to get them on the market.
Yeah, but purchasing investment properties, if that is a good strategy for people, so especially people who have saved a lot of money. Uh, I'm of the position that saving the money is just not going to do it by itself. Compound interest is not going to take you to a promised land. It's just not, right? People don't live long enough, especially when you're starting out with a smaller amount of money, and that relationship between the cost of goods and services and your savings is just not there. Now, if you started out with like 50 million, sure, okay, that might help. But if you're starting out with a smaller amount, compound interest is just not going to do it, in my opinion. And I'm one of the few wealth advisors that's willing to say that out loud. Um, but it doesn't mean it doesn't help, and it doesn't mean you can't use it. But having the savings is really good for the lenders, because the lenders are, the people who are going to open up that vault and back and hand you the money. Of course, you're going to have to use some of your money for down payments, but you're going to be able to purchase the investment properties, and you're going to be able to now have the appreciation, not just with the investments that you have, but also with the investment property, based on not just the down payment, but also the loan. So, you know, if you're getting, X% on your investments, but you're getting like only like maybe a 4% of capital appreciation on the real estate. Well, what is the 4% of versus the other side, right?
Mm.
So it could be because you're using because the loan is part of your basis in the property. So just understanding that, how to understand cash flow, buying a real estate that's gonna cash flow for you, put some money in your pocket so you can actually enjoy life now, not just waiting 30, 40 years watching your financial grass grow on paper. um, that's where the real wealth, in my opinion, comes from the cash flow, being able to afford your life now, advance your lifestyle now. In my case, affording my kids very expensive sports activities
Yes, it is.
right now, and but it's fine. I don't worry about the money going out the door, and I think like, oh, if I invested that and I got a X% interest rate on it, in 30 years it would turn into this. And I'm like, no, they're 14 and 12 right now, and that's what I
You
want
don't
to
worry
enjoy.
about what return they're going to give you.
Yeah, yeah, not yeah, no. Money is a great tool to enjoy life, and
Right,
if you're
right.
if you're producing more of it, you're able to enjoy a little bit more, and that relationship just kind of keeps going up and up and up.
Hmm.
So, but just saving money forever, it it sucks, and it's just not
Well, what I
it's not
used
what
to
people
tell
hope it
my
is.
dad, because there was originally four of us. I did have one pass, so that then the money would transfer to my nephews. But my point is what I kept telling dad was, my gosh, dad, you worked hard for that money. Go enjoy it. Quit worrying about what you're leaving us kids. For that point, we should be able to take care of ourselves at this point. So stop worrying about it. So go
Well,
enjoy it. You'd work
it's
so hard
even
for it.
it's even better when you do both, right? When you can enjoy money now and not worry about having it still be there after you're
Mhm.
gone, while you're taking a good income stream from your assets, and you just like, I'm going to enjoy my money, and it's going to continue to work for me, and that's great. And there's still going to be an inheritance for if legacy gold is important to you. I mean,
Right,
it's important
right.
to a lot of people, not
It is
everyone.
important to a lot of
So
people.
but it's certainly important to me. Um, but I want to enjoy my life now and leave money for for the next
I
generation.
think I think as far as my goal, yes, I do think it's important, but I think my goal for my children, now keep in mind I had four biological and then I had some adopted, plus I'd raised some of the others in the family, but my goal for them was to make sure they could, right, have the tools and the skills to think of these things, and take care of themselves and work on their legacy goals if that's what they want to do for their family, but have those skills ahead of time. But then everybody always laughs at my, okay, you're now an adult. Guess what? It's time to start thinking about the investment tools, the retirements, the wills, the trusts, and they're like, "But mom, we're just headed off to college. I don't care." So mine was forced into not only think about how they're going to live their life, but think about what's for your future. What are your plans for your? We're not just going through life aimlessly. Figure out what it what it is and how you can take care of yourself presently, like you were talking about, but then plan for your future to where you have some of these tools to pass on for your legacy. So it's super
Yeah,
important.
it's important to a lot of people, and a lot of people just kind of throw their hands up, or they fall into the idea that it's better for them to be broke or something like that. It's like, well, that's what they want you to think, right? That's what the
Mhm.
proverbial they want you to believe that. And while they're, while their family just keeps increasing wealth. So it's really about changing the mindset
I agree.
of people, and it's not easy to do, especially if you've been playing checkers your whole life and you've been taught checkers. And it's even
Hmm.
more especially hard when you're the children of checkers players, and it's really hard sometimes not to take financial advice from people who love you. But in a lot of cases, that's if you're going to switch over and you're going to start playing a chess game, that's likely
I
going to have to be the
really
case.
wish they taught it more in schools. They've taken so much out of the schools, and I've often preached, gosh, I wish, the society and of course after raising the kids and seeing the different classes that went through and different things, and it was like, gosh, I wish, they would come back to the core stuff on helping, people figure out finances and home life. And I know education's super important, some of the core classes and all, but I don't think sometimes people just in general kind of know how to live life and start planning for some of this stuff. I think a lot of that's been taken out of the home as well as the classroom, to where some of this younger generation getting this. I know back in my grandmother was a realtor probably 100 years ago, and very different real estate world for us. But back in their generation, they would save till they wouldn't get their first house till they were probably 40s, 50-year old. Kids are half raised by the time they get their house. They'd save and save and save, and then they'd just go pay cash for them. So right now it's just a very different world with the lending and different things where you can get into a house in your 20s if that's what you want to do. You're going to have to somehow keep a roof over your head. So I don't know. It's just a very different world out there, and I do think a lot of it's been lost in the financial end of it on teaching people what's best for them and how do you move forward in life.
Yeah, so I mean uh, being taught, even like the financial world, in my opinion, is really not harboring. It's almost like a paternalistic element to it, where they're kind of teaching this checkers, and but they turn around and play chess. I mean, you look at any financial institution, look at banks, you look at investment companies. Heck, you look at insurance companies; they're like, uh,
Mhm.
I mean, I'm not saying they're doing anything wrong. I'm saying they're doing everything right. It's just not what, in my opinion, what they are. They're not
I hear a
telling
lot about
their
like,
employees to tell the clients the things that they are doing. They want a lot of times for them to play a checkers game while they
Mhm.
turn around and play chess. I mean, you saw these investment companies buying up all the first time home buyers, outbidding them left and right. And where did they get all that money from? Well, they get it from me because I'm putting my clients' money into their funds, and then they turn around and outbidding your first time home buyers.
And it's
So, but
very
then they'll say
true.
things
Very
like, "Oh,
true.
don't invest in real estate. It's too risky." Like, well, why are you one of the biggest holders of real estate in the world if that's the case?
Do they even sometimes know what's in their portfolio? Maybe. Well, how about like I don't know. I've heard a lot about like mutual funds lately, which is an insurance project or an insert insurance um tool, isn't it? I mean, I don't know. I've heard about a lot
No,
about that.
mutual funds are investment companies.
Is that something
So
that I don't know? I've heard a lot about those. Everybody, I know a lot through my friend groups and different things have mentioned mutual funds and different things, and it's like,
mutual
oh,
funds are, I mean, they're portfolios of market based assets.
hmm
And I'm not saying mutual funds are bad, and no, mutual funds can be great for a lot of people, and especially if they're using them to show lenders that they have the money to pay them back if they
hmm
wanted to.
Well, they just had
You
a
just don't
bout
want
there,
to.
wasn't it, when the president came into office? Wasn't there a big drop or something? And I heard a lot of gripes and grumbles and different things about it.
Are we talking about the tariff stuff?
Yeah, is that what it was? Was the
Oh
tariffs?
yeah, I mean, there's always going to be ebbs and flows in the market. I mean, people that are relying on the market for everything, yeah, you can get in, that can be a problem overnight, right? So you can see your assets go down in value, especially if that's the only thing that you're focused on for your income stream. Yeah, and then that can be a huge problem. But when you're using the market as more of a storage of wealth and getting that appreciation over time, but you're using it also to show lenders that you have the resources to pay them back. So that's why you're a good bet, and they should give you that loan to purchase that real estate or
So do
that
you
business or something that's going to cash flow.
kind of what is your view as far as diversification? You're kind of thinking that, once you take a look at my background, how I think, what I'm planning on doing, then you look at maybe the diversifications of where would be most suited to my thought process and where I want to go in my future.
Yeah, diversification is misused in my opinion a lot, right? So diversification it depends on what context you're talking about. Like, because people say like, well, I'm diversified. I have stocks, bonds, mutual funds, ETFs. But all that is the same element. It's the market based asset, right?
Mhm.
When I talk about diversification, I'm talking about okay, what do we have in the market? What do we have in real estate? What do we have in business? Our business portfolios? What do we have, and other things that are generating income and building wealth. So it's just a different way of using the word.
Different way of using the word. Okay. All right.
You got to understand what context the person's talking about. If they're saying, "Are you diversified?" Like, well, what do you mean? Because if you have all your stuff in the market, I wouldn't say you're diversified.
Right. So you would look at other tools that would probably, I don't know, maybe take up the slack when one of them's down or something.
What's creating income? In my opinion, income is what is going to create the income so you can pay for travel baseball like I do, because
Mhm.
they don't care about the investments. They want you to pay them, right? So what is creating the income for you, and how do we increase the amount of income that you're able to obtain um, by purchasing the assets that produce it? So that's where a lot of people, in my opinion, go a little sideways, is that they just save, and in 30 years they think they can take this large stream of income from this quote unquote nest egg, and a lot of times that's the math just doesn't work out.
Savings accounts
And
don't really pay too much. I mean, is it really worth hiding your money in some of those savings accounts and different things? So
I'm not talking about savings accounts. Not like I'm talking about bank products. I'm talking about market-based assets. So
market based.
like if you have a whole bunch of money in, let's say, a 401k, right, which is generally made up of mutual funds and other market-based assets, it takes a lot of money to be able to generate the kind of income that you would need to sustain a comfortable retirement, just
Hmm.
strictly out of that vehicle. Um, so, but that doesn't mean having the vehicle is bad. No, 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 no. It means that if that shouldn't be your only thing, and how are you using it while you're able to build wealth? Like, are you, it's having all these market-based assets are great again for the lenders. The lenders love it,
Hmm.
So, but yeah, if you're not doing that and you're solely relying on those market-based assets to build enough
That's
enough of
what
a
we
nest
need
egg
you for,
to
Freddie.
take out an income, it's gonna be disappointing.
Yeah, annuities is that's one I was thinking of as I'm hearing a lot about annuities. Isn't that an insurance project or
That annuities are an insurance product.
yeah, product?
Also, there's an when you hear the word annuity,
There's so many different
again,
ones out there.
well, there's different ways to use the word, right? I love annuities, but I'm using it in the context of not in a financial product. I'm using it in the context of a steady stream of income, right?
Mm.
So, like your mortgage is an annuity due to the bank every single month, right?
Oh, it's you. You're
So rent is an annuity due to you if you are if you're a homeowner or if you have investment properties. So having it just getting a K1 whatever it's if it's steady it can be it's that's what the word means.
hmm
But no, I'm not talking about the financial product. Stop. Everybody needs to just kind of calm down with what financial product out there is better than what other financial product. Everybody just needs to stop, in my opinion. Just stop. Like,
hmm
because if I walk up to the boat to go to the boat show here in Tampa Bay, and I walk up to somebody with a $25 million yacht, and I ask them, "Hey, how'd you afford this $25 million yacht? This is awesome." They're not going to respond with any financial product, right?
Not
They're not going to
yeah.
say, I fully funded my IRA and that's how I'm able to have this $25 million yacht. They're not going to say, I dollar cost averaged this mutual fund starting at 22 and now I have this yacht. They're not going to say, I bought this insurance product, whichever one you want to talk about, with a guaranteed interest rate. Now I have this yacht. Like that's just not going to be the answers. It has to do with strategy. Now, it doesn't mean individual financial products are bad. If they're used
hmm
right, great. But again, if they're used over in an overall strategy, not thinking the product itself is going to lead you to a promised land, it's not. But using again, having all these financial products to be able to obtain loans to buy cash flowing assets such as real estate and such as businesses can really amplify your wealth very, very quickly. So it's not just like you want the thing built. You don't want just the tools. It's like if you said like, oh, I want to build. You were talking about sheds before, so we'll use a shed. If you want to build a shed, I said, okay, here's a wrench, here's a hammer, here's a set of nails. You're gonna go, okay, great. And I say, see ya. Like, no, wait, no, these are the tools. This isn't the shed. We want to
mm
build the shed. So I feel like people use the products too much and again to arguments over which product is better than what other product, and it's just it's nauseating to me when we're trying
Well,
to
it
build
may be
wealth,
better
not
for
have
them,
a
but it
bunch of
might not
tools.
be better for the next guy. Who knows? So that's what we need you for.
Well, I tell you who it's most beneficial for are the financial institutions that are selling products or investment, any type of investment products, and then they turn it around and again out bidding your first time home buyer on that property.
And they do a lot. It's like, and how do you compete? And then you have to, being a realtor, of course, I'm dealing with the buyer typically, usually. And it's
Mm-hmm.
like, and they're like, well, how do we get past this? And it's like, well, sadly, right? You need more tools.
You need to play the same game they're playing. It's
Yeah.
you're not going to play it on the same scale though, and I think people get hung up on that. I think like, oh, if I don't have like bazillions, it's not. There's no point in playing chess. Like, no, you can play chess on a much smaller scale, and really improve your life, in my opinion. But it's just not going to be the same. You may not have Boardwalk and Park Place, but you might be able to have Oriental Avenue in
Oh, that's a good
Vermont.
analogy.
And those can bring in some decent income for you. And if you have
Hmm.
enough of those around the board, you don't need Boardwalk and Park Place to win the game,
Hmm.
right? So yeah, just a totally different way of looking at it. But imagine if you just didn't buy any of those properties. You went around the whole board, just never buying anything. How are you going to
Hmm. You're never going to get ahead, are you?
win?
Our place is going to win out every time.
Yeah, Mediterranean was the Baltic and Mediterranean Avenue will
Yeah,
whoop you.
that's so true. Yeah. I know we have a lot of, we have different types of investors in real estate as far as, we have the ones that just fix and flip. We have the ones that buy the rentals. Right now, it's really big. And with our buyers in general is the ones with the accessory dwelling units. They call them ADUs, right? Because our home prices, especially here in California, and we are still not what the northern end and the southern end is because we're right in the Central Valley, but they're the prices are going up so much, right? And our first time home buyers are really struggling, like you said, to be able to afford some of this. Yes, they have to pay rent. They're going to be paying it. You might as well be paying it for yourself. But it's kind of forcing a lot of either what's happening is it's forcing a lot of double families maybe moving together on a property that has two homes, maybe a parent, set of parents and kids or something, or
Mhm.
maybe the parents and then put the teenager or the college student in the back end, a separate house in the back, so we're creating a lot of multi family living situations. A lot of our first time home buyers, like you said, the chess players versus the checkers players, they're buying it and they're renting one of them out, right, and living in the other one, and then they'll whatever get that one paid off or whatever, or get enough saved up for another one, and then they'll do it again, right? They'll buy a double property, live in one and rent out the other. So that's how they're building their wealth. But there again,
That's colloquially called house hacking.
yeah, I like that strategy though, as far as it's kind of depends on who has the bigger mindset or the different type of mindset on, okay, I want to live in a house. I want to pay for my own house, but I still can't afford it. So they're
Or
renting it
purchasing
out.
rental properties in other places and renting where you want to live too. That's
Mm,
another strategy that's become very popular. And 20 years ago, it might have sounded more crazy than it does today because of different socioeconomic factors. But yeah, the important thing is that people really need to start advancing their game and understanding which game they're playing and which game because if checkers is going to make you happy, play checkers, be
hmm.
damn good at it, right?
Hmm.
Don't have debt, save and save and save and save, um, and just have the right expectation on what that game's going to produce.
Hmm.
So, but if you want something more, you want something different, then stop with the checkers thinking and move your mindset over to more of a chess mindset where you're looking at things from a different perspective, including debt, including taxes. When you're playing checkers, you're looking at taxes as like an enemy, like something you have to deal with. When you're playing chess, you're looking at tax code as a partnership where you and the government are mutually benefiting from these style of investments that the government wants you to do, and that's why there's a tax code specifically for it.
I like your analogy, chess versus checkers. What's some contact information if my viewers would like to get a hold of you and maybe and delve in this little conversation further?
Sure. You can go to our website. It's optafinancial.com. That's OPTA financial.com. And people can also look me up online. Uh, so it's really just what however they want to,
Do
however they
they
want to
typically call
communicate.
you, email you, just
They can,
usually put
they can
the
call. Yeah.
request
They can call.
online?
Calendly kind of runs my life now. So the best way to to set up an appointment with me is by using the Calendly link on the website.
I know I'm
Um,
kind of right there with you. You've seen that that part of me.
yeah,
Well, it was wonderful chatting with you. I really enjoyed it. Maybe we can do it again sometime. This is Realtor Linda Peltz. I'm here for all you and your friends' real estate needs and questions. Just give me a call, give me a text. Please like my channel, and I will catch you on the next one. My license number is 01997670. Everybody have a wonderful day.